Welcome to Drill Down Earnings. We have first quarter results from Intel, an important quarter for a company that has been struggling for quite a while. Has the turnaround happened? Not yet. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. Wall Street likes a beat or a miss, and this was kind of neither. We knew the numbers weren't going to be great. Company reporting $12.7 billion, but a big loss, $381 million loss in the quarter. And you know, it's a lot worse than last year. I mean, the numbers turning negative, that's not good. Now, the revenue growth for this company was sluggish. So 9% revenue growth, it's a little better than things had been, but not great. That's on a year-over-year basis. Annual stuff matters because PC sales are still so important to this company. But gross margins kind of advancing, kind of getting a little better, 41% in the quarter. You know, Intel wants to put these numbers well above 50%, but 41% they'll take because they've seen worse lately. The big problems are the foundry business, where they make those chips for Intel and for other companies. They warned us a few weeks ago that things were not going great there, and yeah, they're not going great there. And when 26% of your revenues are from the foundry business, and that business is losing billions of dollars, it drags everything else down. It also distracts management because they've got to fix that big problem. And it also, as they start to look forward to what their business is going to look like, they really want to make sure this thing works. Wall Street's anxious to get this going. Intel is too, but Intel hasn't delivered quite yet. They've got a long ways to go. It's a long-term process. Now, they were spending a lot of money in research and development, understanding that the future of these new processes of making tiny, thin, angstrom-level wafers and chips is going to be a new process for them that they haven't undergone before. And so they're spending a lot more as a percentage of revenues, 34% of revenues spent on R&D. That's a lot, and that's more than it has been for this company. But when the numbers came out and they guided and said next quarter wasn't going to be much better, the first half was going to be kind of weak, well, Wall Street didn't like that. Stock sold off big time, about 8% in after-hours trading. And, you know, certainly the stock has sold off this year, but it's actually up 20% in the last year or so. So there is some expectation that things are going to get better for Intel, and it hasn't happened yet. Now, Pat Gelsinger, the CEO of Intel, just told us, we got to be patient. We got to wait. It's going to happen. It's going to happen in the second half. A lot of their businesses are going to get better in the second half, but right now they're just not great. Listen to Gelsinger's, I'm not going to say, they're not excuses. It's just explaining with some confidence that things are going to look good later.
Well, I'll just say Intel Foundry, you know, it's like every quarter from here till the decade ends, we're seeing improvement in the Intel Foundry. And one by one, we're seeing all of those business improvements, you know, both on revenue and margin improvements over time. So we feel very comfortable that the second half outlook is quite strong for the business. A first half a bit weaker, but we think it's very understandable, very explainable, and a second half outlook that will be very comfortable for every business across Intel growing, and a lot of momentum as we go into 25.
So first half weak, second half strong. Believe it when we see it. I think that's what Wall Street is saying right now by selling off the stock. But yeah, we'll believe it when we see it. I want to get one number that tells you a whole lot that really summarizes all of these results with the drill down bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Everything you need to know about Intel earnings is that the earnings just weren't great. The guidance was worse. In the quarter, the company had $12.7 billion in sales, but lost money, lost $381 million, and losing money, not good. But I think the thing that really matters here was the guidance. They're saying that their foundry business is just going to take a long time to build, and the rest of their businesses are going to get better in the second half, but aren't better now. Maybe the stock market not really believing all that. If there's one number that means everything, it is the losses in the foundry business. $2.474 billion in losses in the quarter. When other things are going well, like desktops and PCs were for them, those big losses in foundry kind of are all that matters. All right, thanks for listening to Drill Down Earnings. Check me out on X at Cory TV, Drill Down Pod on the socials, or Futurum Group for robust earnings reports. Drill Down Earnings, part of 6.5 Media.